Good afternoon, everyone. I want to welcome you all to the Tax Resolution Help Center. My name is May. I will be the host for today's session and introducing today's speaker. I will also be coordinating the Q&A chat session at the end of this session. I want to congratulate all of you for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you're entitled to live a happier, healthier life by keeping more of what you earn and getting the taxman off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last about 20 minutes, plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And to better understand what might be on your mind during the session, I might include some pooling questions to ask you. I will then finish a 5-minute wrap up, and also a survey will be sent looking for your feedback. And finally, the session will be recorded. The topic for today's session is dealing with liens and levies, garnishments, and asset seizures. The tax expert for today's session is Vincent Lloyd. Vincent has been a CPA for over 30 years and has presented individuals and businesses before the IRS to provide relief options to remove, reduce, and resolve their tax obligations. Certified public accountant licensed in the states of Minnesota and Illinois. He is accredited by the AICPA as certified in financial forensics and as a personal financial specialist. Vince is a QuickBooks certified pro advisor and provide tax planning and management to individuals and small businesses. With that being said, introducing Vincent Lloyd.
Good afternoon, everyone. Glad that you can be here with us today. And so, yeah, we're going to deal with liens and levies and garnishments and asset seizures. And it's something that I always see practitioners struggle with, and I also see clients struggle with because you have to really understand that this is an IRS process. So, one of the things that what you have to do, especially as a practitioner is concerned, is to get my mouse over here, is you need to understand IRS audits and how also to advise delinquent taxpayers. And that's not always an easy situation because at this particular point in the process, there are very few options left for the client. And so that's why it's imperative that you have to understand the IRS collection process. One of the things, and this is something that I always stress when dealing with liens and levies and things, you are in an appeal process. And this is assuming that you just outright have not paid. Hey, I'm going to go and pay, then you wouldn't be here. But there are two types of appeal processing. There's a collections appeals process, and then there's an examination appeal. They're similar, but they have little nuances that you have to really understand. So as my slide is showing, that the collection appeals is dealing with, collection due process, offering compromise, trust fund, recovery penalties, and that's one of the situations where an individual did not remit the payroll taxes, jeopardy levies, and collections appeal program cases. So, different set of facts of what you are trying to appeal. And then examination appeals is generally docketed and non-docketed cases generated from the IRS examination functions. All right. And in all of these situations, and this is the word I want you to remember is determination. Determinations have been made by the IRS. These appeals are for, did the IRS follow its policies and procedures? That's it. Okay. It's not to determine the right or wrong, the good or the bad. Is did the IRS follow its process and procedures? IRS has to send a letter in 30 days, 45 days. IRS has to respond in 90 days. Did they follow their procedures? All right. As far as that is concerned. And as I said, the word is determinations. If you want a redetermination, that's when you go to tax court. That's when you go to district court. The difference between tax court or regular district court, circuit court, tax court, you do not have to pay the tax up front, and you can file your case. In district court or any other court, you must pay the tax first, and then you are suing to get your refund. That is the difference. And so this is one of the things going in this process of liens and levies. Now with a lien and a levy, we're not dealing with an examination fee. We're dealing with a collections fee. So what is a lien? All right. A federal tax lien is a government's legal claim against your property when you neglect or fail to pay a tax fee. The lien protects the government's interest in all of your property. And remember that. It protects the government's interest in all your property, including real estate, personal property, and financial assets. A federal tax lien exists after the IRS puts your balance due on the books, assesses your liability, which means determination. A determination has been made. They send you a bill that explains how much you owe, notice and demand for payment, and which tends to happen as far as a lot of clients, they neglect or refuse to fully pay the debt in time. So now we come up is what is a levy? A levy is a legal seizure of your property to satisfy tax debt. So we see in the previous example with that lien, it's just the government trying to protect its interest. But here in a levy, the government is actively in the process to collect, take your property to satisfy an outstanding tax debt. And that's the thing it says. Reading here, levies are different from liens. A lien is a legal claim against your property to secure payment of your tax debt, while a levy actually takes the property to satisfy that tax debt. So when the lien comes into being when the IRS assesses, a determination is made, a tax against you, the IRS files, and sends you a bill that you neglect or refuse to pay. Remember I was saying in the beginning, it's this process. So you are, the client is not wanting to pay and stuff. And so now here it comes, the IRS is going to file this lien. It's going to alert creditors that the government has a right to your property. And now you have a right to appeal if the IRS advises you of the intent to file a notice of federal tax lien. And so now here's where, this collection appeal process is coming. Not as far as an examination, but a collection. So we see these differences of the lien as a legal claim and the levy actually takes the property to satisfy. So the types of levies, there are basically three types. There's a wage levy, a bank levy, and an asset. And we're going to go through each one of these briefly. All right. So in here it says a levy on your bank account takes only what is in the account at the time your bank receives the levy. The IRS must issue another levy to capture additional funds at a later date. And the reason why I put this one up there, because it's generally the only one that is not a continuous levy. And that's what this is bringing up. Other levies have a continuous effect. They remain in place until the IRS releases the levy or your debt is paid in full. Federal law allows the IRS to issue a continuous levy on your salary and wages and certain federal payments. That's why you see people have their Social Security checks or their disability checks are being garnished. So levies against your wages or Social Security income are generally continuous. So here, as far as a wage levy is, you can make other arrangements to pay your overdue taxes. And this is sometimes a payment plan, which is, will come through your bank account and you can get this type of levy released. If not, it will stay on there. And what will happen with these wage levies, no one will know until you get the letter. And I was explaining this last week, is that the IRS, to say the job, they will send the paperwork to the job and say, we want Joe Smith's wages levied. Okay. That business will have that. It will not notify the employee. It will tell them nothing. Subsequently, that individual will get a letter in the mail saying your wages are going to be levied. They will call their employer and try to make some other arrangements. The employer says, too little, too late. You can't do anything about it. All right. So there's really no process as far as a wage levy that you could come up in there and stop that. So, and it goes down here in the middle of the paragraph, the last paragraph, it says, your employer will provide you with a statement of dependence and filing status to complete and return within 3 days. If you do not return that statement in 3 days, your exempt amount is figured as if you are married filing separately. And that's when you have an exemption. Okay, only when you have an exemption and they need some additional information to be able to accurately reflect on what monies they're going to withhold and send to the IRS. And then we have bank levies, which if there's a good levy, this is the best one. So when the levy is on a bank account, the Internal Revenue Code provides a 20-day waiting period for complying with the levy, which means the IRS sends papers to the bank. As of March 1st, whatever money you have in that account, it goes to the IRS, whether you have $1 million in that account or whether you have $1 in that account. Effectively, that account is frozen for 21 days. So yes, of course, if clients do not add any more money into the account, it will not be levied. Okay, but if they continue put money into the account during that 21 day, then at the end of that 21-day period, that money will be seized and sent to the IRS. So the issue comes down for the client. I always tell them, if you do put money up in there, it will satisfy your tax debt. But if you choose not to, that is up to you. And of course, you will know that most clients do not. After the 21 days, the money reverts to the IRS, the Treasury, and then you can go right back to adding, the client can go back to adding money into that bank account. And of course, the asset levy, which is that which is to your property. And I've been in cases where if it has an existence, the IRS is going to take it. I've seen the IRS take 20-year-old vans, stuff which I would attribute as having no worth, that they have seized it. So when you have that balance, as it's saying here, and they issue that levy and then subsequently a seizure, and people use that as the parent agreement interchangeably. But when they attach those funds, and while the term seizure is typically used when the IRS attaches to physical property, and they're going to get that whatever it is to satisfy that particular debt. And one of the things, and this was earlier, said some levies have a one-time effect when IRS takes an asset all at once. So you got a 20-year-old van, they take it, they sell it and get value for it and apply those fees to satisfy your debt. So as we were talking about it earlier, seizures and the collection notices, IRS is a process. The process is the most important thing. If you are dealing with a revenue officer, a revenue agent, or whatever, the biggest advantage you have is understanding the process. People ask me, oh, well, if I do this, I do that. You can yell, you can go in there, you can scream, you can do whatever, but at the end of the day, it's that process. And you want to question those representatives, hey, they didn't do this or they didn't do that. And that's why sometimes for some people, they don't really understand that. Why sometimes the IRS or in all of these processes very stringent and particular about that, and that's the reason why. Because if you go into appeals, those are going to be the issue. Did the IRS follow its policies and procedures? So, and this is just a summary. And I have, always tell the clients, talk to the IRS, try to come up with some other way instead of getting into this point with these liens and levies and garnishments and seizures, because that is a place that clients do not want to be, because again, your resolutions are very limited, which means determinations have been made that you owe the money, and now how are you going to pay that money? And to be able to go to whether appeals process or to go to court, even with tax court, you've got to have some basis to be able to go to tax court. The majority of tax court cases fail because there's no legitimate issue as to why someone is putting forth their particular case. So whether it's appeals, whether it's a tax court, you got to have a basis of why the IRS was wrong with this levy, why the IRS was wrong with this lien, why they were wrong as far as seizing. Hey, I made payments, or I did this, or I made some effort to go and pay, and the IRS did not follow their process in that. So that's and this is just a brief overview. We're not really getting deep involved or going through. I do have a case that I don't know if it came up in the, let me go and see. Yeah, I've got something in the chat. Hopefully y'all can see that difference between, and I can pull that up if we can look at that briefly. Bring this case over here. But this was a case, and it was the difference between rejecting an OIC and reviewing a rejection. And the word here is this review. And that's one of the things I stress about this process is that appeals is about reviewing, not making determination. If you wanted a determination, a redetermination, you have to go to a court to get that because the IRS makes the determination and you need a court to go to the deed. So, and this is up in the chat, and it just goes to a case where this man, Michael Brown, he did everything he possibly could. He tried to use the IRS against himself, but literally everything that I've experienced, these are the things that clients bring up. And so I encourage you to go read that, and then it will show you how you need to focus on in this process of dealing with these liens and levies, what steps you would take to go and um, satisfy them. Okay, man, that's about all I have. I'm gonna stop
Oh,
sharing.
okay, perfect. Well, thank you for that, Vince. We do have a question here for you. This is from anonymous attendee. He is asking, can the IRS or state ever seize my 401k or IRA?
Unfortunately, yes, they can. They can seize any asset because that is the priority. Now, because it's an asset of some value, but the thing of what it is that they cannot attach it. But if you start receiving payments from your 401k and your IRA, that's what they attach.
Okay,
You've got a
got it.
stream of income coming out, and they're going to attach it. So basically, like it's like a bank account. They're going to send your IRA provider 401. We want to garnish this, and now the IRA provider will sit up and say, "Well, the person's not getting any distributions as far as this is concerned." So, but and I always tell them the IRS lasts forever. The IRS is not necessarily into immediacy. You know, we expire off of this herb, the IRS is going to keep on going. And so they want to hold on to those assets because they know at some point in time in the future, you know, whether you hear or not, it will, you know, become available and they're going to get that money.
See, okay, perfect. Thank you for that answer. Second question is that will the IRS ever garnish my social security income?
Unfortunately, yes, they will. All right. And so what happens is, and here is the little nuance in that. Your record with the IRS has a flag. And when it has that flag on, any government payments that you get will be stopped. And this was one of the things, and for us old enough, going back to the Clinton administration in the 90s, this was the deal that he cut. And that was one of the things where they had welfare, work for welfare and things like that. But that is where that came from. Whereas now they put that flag. So that's when you don't get your IRS refunds. They're going to take a portion of your Social Security. They don't take it all, but you know, through the calculation, they're going to take a portion of that, and that's been will be remitted. And after that had came out, and so this is probably like 20 years ago. That's when these cases start going to court, and people were like, "Wait a minute!" They had them with student loans. A lot of these things were federally guaranteed, and that's when these cases came up, and the court said, "No, no, too little, too late. That money is gone." So
Okay. Thank you for that answer, Vince. So, one last question. This is sent through our live stream. Will the IRS or state ever garnish? Oh, okay. It's the same question. Security income to pay. Oh, okay. This is to pay tax debt. Will the IRS or state ever garnish my social security income to pay tax debt from Jack
will it pay from?
from his garnished social security income?
Yes. So, like I said, any government payments will happen. Um, State is different. All right, so those are two, and let me just say my experience in the last decade, the states have become extremely aggressive as far as tax debt collection. All right. You will see in states, especially with businesses, if you got particular licenses, they will squash down on that. I think even now with the IRS, they have connected it with a passport. So they're going with more and more ways to be able to apply pressure to individuals to go and pay. So at the federal level, all these government payments, you got a flag on your record, they're going to get those monies up. Like I said, you got student debts, you've got, and matter of fact, because it was like even today that the IRS is, um, uh, excuse me, Supreme Court is trying to look at the cancellation of student debt. All right, and they're weighing that, and I haven't really looking real close, but I know that that's where one of those issues is coming up about how they do that, because I would think for someone who has had their uh, payments already determined and they've been basically garnished to go and pay this. Now you're coming up and extinguishing somebody's debt, and they won't have to face the same that I had to go through to go and pay this debt. So, but yeah, they will. They any government payment to satisfy, they will withhold. They will attach any asset, any retirement accounts and things and such as that. They will do that. Now I know the issue comes up with some people is like third party creditors. I owe my credit card company. Can they get in my 401k and stuff like that? No. All right. But when you're talking about a tax debt, all right, which then, and that's another day, which is like bankruptcy of how to get around that bankruptcy, whereas these payments will not be withheld.
All right, perfect. Thank you. That will be our last question then. Is there anything else you want to add before we end?
Now, the only thing, and like I said, I do this every week, and I try to stress that determinations and redeterminations. Determinations are made by the IRS, redeterminations are made by courts. Okay. And so when you're dealing with liens, levies, seizures, garnishments, that's those are appeals. And we showed you got collection, you got examination appeals. They only deal with, did the IRS follow their policies and procedures? That is it. A lot of times practitioners, a lot of times clients want to go into these appeals processes and do redetermination. That does not happen. It only happens when you go to the tax court that you don't pay the tax, or you go to district court where you do pay the tax and you're seeking a refund. And generally when in that there's some other issues that that someone is trying to adjudicate as far as their situation is concerned, and that's one of the reasons that they will go and pay the tax.
All right. That answers the questions. Thank you so much, Vince. That covers our questions for today. And that's it for today's session as well. Thank you all for coming. And we do this and we want our commitment is to help you reduce your taxes and increase your wealth. We do this with a try tax method of DIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution. Reduce stress from no IRS or state tax debt and a happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. Since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check our website at taxresolutionhelpcenter.com. And please join as a member today for $19.95 only per month. Thank you all for attending.